today's report, the 16th of July, 2025. Okay, so what's in store for us today? Hmm. Right, today I'll share about Basel III gold and the future of the US dollars. So first of all, what is Basel III? Now, Basel III is a global banking framework developed after the 2008 financial crisis to make banks safer and more resilient. Now, it requires banks to hold more high-quality capital, limit excessive borrowing, and maintain liquidity buffers to survive financial shocks. Okay. Now, a recent key innovation under Basel III is the elevation of physical gold to a Tier 1 asset, placing it alongside cash and top-rated government bonds as a core element of financial stability. So, what does it mean, gold as a Tier 1 asset? Now, under Basel III, physical gold, and I repeat, it's physical gold, not the paper gold, as in the gold, the real gold, that a bank owns directly and keeps safely in a vault is now treated as a very safe asset, as reliable as cash or government bonds when regulators look at the bank's financial strength. Now, this means banks don't have to set aside extra capital to protect against risk when they hold physical gold, which makes it an attractive option for them. Okay, so this is a recent development. Now, Basel III makes physical gold an attractive safe asset for capital adequacy purposes, but banks cannot simply lend cash out because they hold gold reserve unless they convert the gold into cash first. On the other hand, paper gold like gold futures, ETFs, and gold accounts where banks doesn't own specific bars doesn't get the same favorable treatment because it involves risk tied to other parties keeping their promise. So this distinction has encouraged banks and central banks around the world to buy more actual physical gold, reinforcing gold's reputation as a safe and trusted asset. It's also leading some countries to reduce their dependence on US dollars in their reserve. And what is really happening right now that is causing the reduction in of dependence on the US dollars, that is the BRICS. Okay. At the same time, BRICS nation, which is basically Brazil, Russia, India, China, South Africa, and its expanding members are moving to reduce their dependence on the US dollar. While they have clarified they are not creating a single BRICS currency, they have made significant progress in settling trades using their own national currencies. Okay, so currently approximately 90% of commerce among BRICS countries is conducted in local currencies, up from 65% just 2 years ago. Okay, so China is now leading this transformation by opening its first offshore gold vault in Hong Kong and planning additional vaults in strategic locations like Dubai, Singapore, Africa, and the Middle East. Now, these global gold hubs are part of a broader BRICS strategy to make gold a core settlement asset, not to issue a gold-backed currency, but to enable trade settlement anchored in gold's universal value. Now, this amount to a return to a kind of functional gold standard where gold itself is issued to balance international accounts without formal convertibility. Okay? So, moreover, BRICS is developing alternative financial infrastructure to bypass Western control networks like SWIFT. Two notable initiatives include BRICS Pay, a cross-border payments system that allows seamless transaction between BRICS nations in their local currencies. And the second is what we call mBridge, a digital currency infrastructure pilot project led by the People's Bank of China in cooperation with other BRICS and regional partners, designed to enable real-time settlement using central bank digital currencies. Now, these innovations, right, reduce the need for intermediary clearing through New York or London and diminish the reliance on the dollar as a transactional medium. So combined with China's gold vaults, these platforms are laying the groundwork for a parallel financial system where gold and local currencies reduce the need for dollar settlements. Now, this came after basically US froze all the access to the US dollar from the Russian accounts. Okay, so basically BRICS is trying to circumvent that and move it, there so to prepare themselves in the event that their own countries are targeted by the US for such measures. Okay, so what we are seeing is we are moving towards a multipolar system anchored in gold. Now, taken together, this move represents a deliberate attempt to build an alternative international financial ecosystem, one that minimizes exposure to the US dollar and the Western banking system, while maximizing independence and resilience for BRICS members and their partners. Now, this evolving system envisions the trade settled in local currencies or potentially gold vaults round the world, facilitating physical gold liquidity and settlement, digital platforms like mBridge supporting instant cross-border transactions that could reference gold as a clearing asset, a decline in the need for dollar-denominated correspondent banking relationships, reducing the exorbitant privilege the US has long enjoyed. Okay? So while while the dollar remained dominantly globally dominant, these developments show that BRICS nations are not merely theorizing about de-dollarization. They are actively building infrastructure to make it a reality, and gold is becoming an essential part of this infrastructure. So obviously, these developments have drawn sharp reactions from Washington. President Donald Trump has accused BRICS of trying to undermine the US dollar and has threatened punitive trade measures, including a proposed 10% potential additional tariff on imports from BRICS countries. Okay? Trump has emphasized that defending the dollar's reserve currency status is a matter of national security. And you can see this, his statement in YouTube regarding this. And he has said, this if the US dollar, the reserve status is being questioned, it could destroy the US. So, end of the day, what's the outlook for gold? Now, steady demand growth due to Basel III's favorable treatment of physical gold as a Tier 1 asset is encouraging banks and central banks to increase their holdings, reinforcing gold's role as a safe haven and reserve asset. Now, however, if the Federal Reserve or other major central banks keep rates elevated to fight inflation or defend their currencies, this could limit speculative upside for gold since gold pay no yield. Okay, so if the rates are higher than the returns and it's more stable, investors still may go to the bonds, for example, in the short term. And when I talk about short term, maybe it's still in the next 5 years. Furthermore, if the global economy recovers and confidence in fiat currencies rebound due to economic stabilization or reforms, gold safe haven appeal may soften temporarily as well. So these are the two things. Whatever you've seen so far, gold moving up, to above 3,000, this is supported by all the central banks buying them. Remember that. But when the buying stops and everything recovers, things can change. Okay, the money is always looking for areas that could secure better returns. Let's remember that. Okay, so what's the outlook for the US dollar? The shift from 65% to 90% local currency trade settlements among BRIC countries in just 2 years shows that alternative infrastructure can displace dollar transaction faster than many expected. Now, the dollar share of global reserve has already slipped below 59%, down from 70% 2 decades ago. This recent trend could continue gradually if more countries accumulate gold and alternative currencies. Other than that, the potential for new tariffs or a tariff war under Trump 2.0 and possibly retaliatory measures could fragment trade blocs and accelerate regionalization, reducing dollar usage in non-Western trade corridors. Okay. However, whether you hear the dollar is dying, I don't think so. The dollar still benefits from enormous financial market depth and trust, with US Treasuries remaining the global benchmark for safe liquid assets. There are also no ready substitutes as other currencies face credibility and liquidity hurdles. A BRICS currency or goal-based settlement mechanism would take time and coordination to scale globally. This is not something done in a day. Okay? So baseline for US dollars is it loses another 5 to 10% percentage points of global reserve share over 5 years, falling closer to 50%, but no collapse. I don't see that. So depending on US fiscal discipline and market confidence, the dollar index could drift lower, but major sell-offs would likely be contained by safe haven inflows during crisis. So as a conclusion, the next 5 years could mark a slow but unmistakable shift towards a more multipolar reserve system where gold plays a larger monetary role and the dollar singular dominance weakens but does not disappear. Gold is positioned to benefit structurally from this transition, while the dollar may retain resilience but face steady long-term headwinds. Okay? So with that, yeah, hopefully you understand what's happening to the gold right now. And as long as you know on the ground, what's the cost value, and if gold ever were to move to those areas, then that would represent a very good return. Okay, with that, that's the report for today.